looking at U.S. stocks in terms of the major averages trading mixed on this Thursday morning, and this does come on the heels of cooler than expected inflation figures. Now, the S&P 500 and NASDAQ rose in midweek trade after investors reacted to a trade dispute with Canada and a positive consumer inflation report. Both indexes struggling earlier this week on worries about global trade issues and U.S. economic growth. Now, inflation concerns have grown as tariffs could push prices up even further while also slowing economic growth. The U.S. stock market extending losses on Tuesday this week following the sell-off on Monday, with the NASDAQ and S&P 500 entering correction territory. And like many of the past few weeks, the market slide on Tuesday was erratic and volatile. These head-spinning moves have become routine, creating a roller coaster ride for investors as Trump pursues his goals through tariffs and other policies. Stocks have been trending lower due to uncertainty, the president acknowledging the economy could experience some disturbance due to tariffs that he is pushing forward. Well, joining us from Miami this morning is Gabriela Verospi, founder of Latino Wall Street. Gabby, thank you so much for joining me this morning. So first and foremost, I do want to start out by asking you, how has the change in risk appetite from extreme greed to extreme fear impacted the market sentiment out there?
Yes, of course. Good morning. Thank you so much for having me. So we can see that in the volatility index, right? When we look at the VIX, we see how it has gone up recently. And we're really seeing how these numbers reflecting the fear and the uncertainty investors are feeling towards just the different changes. Every single day we have some news that we have some new tariffs, then they get canceled, they get postponed. There's just so much uncertainty, and what the market likes is clarity. We want certainty, and we're not having that. So that's going to be reflected on the volatility index. And I think also the fact that gold has gone up and that it has so much demand, that just means people are looking to be in an investment that has a little bit more of a safe haven, if you will.
Yeah, Gabby, I do want to ask you about the effect that a higher VIX reading has in terms of investor confidence, because when we look at inflation figures, we're seeing how consumers as well as producers are being affected by inflation and uncertainty moving forward. So what about investor confidence?
When the market is extremely volatile, right, and it has extreme swings, then it's a lot more risky to trade. So for the ones who do, for example, options trading, yeah, you can make more money. You can actually make more premiums. But the reason for that is because they're rewarding you for taking more risk, right? In Wall Street, they say the higher the risk, the higher the reward. So it does affect the confidence in the way that there's just more risk. And right now we're seeing how people are trying to avoid risk. We see that, you know, by the huge demand in gold, as I said, not just by the average investor, by the central banks. It's obvious that we don't have a clear path about what's going to happen, what is going to unfold. And also with the Fed, right? We have the Fed meeting coming up soon, and we need lower interest rates if we want to stimulate this market and this economy. And I'm not quite sure we're going to have that in the next couple of months.
And speaking of the economy as well as the central bank, we're keeping an eye on the nation's capital in Washington, D.C. And on a regular basis, we're hearing about DOGE cutting expenses as well as positions. So what do you think this says about the economy's reliance on spending as well as job creation when it comes to growth?
Yeah, so the economy has been artificially growing, right, by all this out of control public spending. So everything we have seen with like the numbers for job growth hasn't really reflected the reality. We haven't been creating the jobs that we need, the stable jobs, the full-time jobs. They've actually been just a bunch of part-time jobs, summer jobs, government jobs, right, that we're now cutting. So now that we're going from that to just extreme, you know, cutting expenses in the hundreds of billions and finding so many things that are not that are just fraud, then that's obviously going to have an impact on the economy as well, on the markets, right? Just to give an example, in DC, the housing market is coming down because of the unemployment rate is going up. So, we just need to understand that that sector is connected to the markets, and understand the correlation, and that we're going to see them impacted as they continue to cut expenses. But at the same time, it's a crisis, right? So we need to take massive action. There's really no other options if we want to improve and get out of the hole we're in.
Okay, Gabby, well, we will have to leave it there for today, but thank you so much for joining me this morning, and thank you for all of your insights.
Thank you.